The issue of R&D tax credits in general have been a buzz since, well, I would argue since 2022, especially with things have changed. And again, this past year, well, not that this past year, it's only been a few months at this point, right? And R&D tax credits are now, thankfully, something that makes more sense for more business owners. But today I am joined with someone extremely special. Um, I don't even want to give it away. Mr. Bernstein, would you like to introduce yourself?
Yeah, hi. Uh, my name is Rich Bernstein. I worked for the IRS for about 17 years as an engineer. And an engineer at the IRS is not the normal engineer you think of. An engineer at the IRS is somebody who audits technology. And that's what I did. Before I joined the IRS, and I got an MBA and was hired directly at an MBA school by the IRS. Before I joined the IRS, I was a software engineer and I had worked in Silicon Valley, worked in Route 128 Boston, worked in Austin, Texas. Tired of moving around from place to place, decided I better go back and get an MBA in accounting, and that's how I'm here. So, my specialty at the IRS was doing computer software because of my background, because I had been a software engineer for so many years. And um, I was called in to help other engineers around the US by the IRS, both with ASC 350 and ASC 730. And I'm going to explain what those two are. ASC 730 is software for sale. So, for example, Microsoft makes Word, and that is ASC 730 software. ASC 350 software, on the other hand, is software developed by a company for use in its own internal function, to offer a service to its clients. So that's what I did. Both ASC 350 and ASC 730. I am based in New Jersey, but I was often out on the West Coast doing this. But I also did the Midwest. They had me all over the country doing this.
So
So
just to, you might have had dabbled a little bit in understanding how R&D tax credit works, and specifically in terms of software. I mean, maybe just dabbled a little bit, right?
just a tiny bit.
But it's I find myself, um I mean, for me, I've only been in this particular field for a few years now, but one of the things here is my introduction to the R&D tax credits and things of that nature was I start with the regulations, and I quickly realized that there are a lot of tax professionals who weren't even aware that this was a thing. And so when we looked at the what changes to 174, which is the expenditures related to R&D, um, we oftentimes find people like they kind of remind me of deer in headlights, right? And especially when you look through the regulations, you realize that it's more broad. It's broader than people realize, right? And so the common conversation we have is like, look, man, we don't have a research lab, we don't develop drugs, we don't do semiconductors. Like, what do you talk about R&D, right? Um, and I try my best to simplify these things, and I do find that if I get provide examples, software tends to be a very common thing that we tend to at least say that's one thing to investigate. Now, can you provide kind of like it's like if you were trying to explain to someone in layman's terms what an R&D defined by the IRS, right? Mind you, what is an R&D expenditure?
An R&D expenditure is what the tax law says it is. So what that means is that um, if your company is doing something and it includes a process of experimentation, then it can be considered R&D. I think part of the idea is to to think about what a business component is. Part of the IRS tax law says that you have to be doing work in the development of a business component. A business component is a uh, is something that you create for sale or for use internally, and your work designing, developing, improving of a product, a process, a technique, or software is all considered qualified R&D. So it's a super broad area.
Hmm.
It's really almost an art to see what could be qualified in a company's operations, because it's not obvious to the everyday person on
Hmm.
the street for sure.
Yep. And for me, I mean, I think maybe selfishly, when you think about, when you start with the business component test, so to speak, right? They specifically labeled software, right? And look, for me, I am mostly always going to be a big advocate of, look, if it's available to you and it makes, well, obviously compliance comes first because CPAs, our middle name is compliance, right? But if there is an incentive that is available to you, you should definitely absolutely at least investigate if it makes sense for you and your company and, whatever it is that you're working on. But on the back end, compliance should always, always, always be something that you consider. Now, in the software space, I find that there's a lot of confusion specifically, right? Because they're like, oh, yeah, we did this. We implemented a new system. We did a new, we built a new platform. We implemented a new platform. We did this new hybrid something, this, that, and that. There's a lot going on, right? And this is where people, as much as I am an advocate for the R&D tax credit for selfish reasons, right? Let's just call it what it is. I also have this reticence to say, hey, you should absolutely go claim this. This absolutely qualifies. You should, because there are checks that need to be like, so there's still boxes that need to get checked off, right? There's still compliance things. We're still at the end of the day, it's accounting, it's tax, right? For us, it's always, where are your receipts? And so it's complex, right? So let me slow it down a little bit, right? So can you explain to me? Let's start with what how the software, like iOS in general, or internally used software, or software in general, how this plays into the R&D tax credit. Can we kind of like give them the
Sure,
intro?
sure. The reason that we're talking, people think of software and they think of the software made by the big companies out there, the Amazons, the Microsofts, the Googles, whatever the software is. And that is not the massive software being written in the US. The massive software being written in the US is software being written by companies for their own use internally, whether it's a bank that is writing software so their tellers can check people's bank balances, or an insurance company so their agents can check and see the status of an account. Uh, Most of the software being written in the US is internal use software. That is not really well known among a lot of R&D people. People consider, okay, you're in Silicon Valley, you're gonna be audited, you're gonna be doing some software R&D work, but there's a zillion companies in New York and in Chicago and Atlanta, every city you could, Omaha, Nebraska, that are doing software. So internal use software is much more important than people would think. It's a much bigger part. I think it's the largest part of the R&D tax credit being taken. So that means if you're a bank, if you're and you're writing software, that's internal use software. I dealt with a lot of banks. Um, Out of the 10 biggest banks in America, I audited, I'd say, five of them. And the reason I was brought in was because they were all taking software. I did many big insurance companies. I did, defense contractors that you would expect, but there's many other companies, retail companies, and all kinds of companies that are writing their own software, or they're writing software for devices that their employees are carrying around the retail store and checking where items should be, that kind of stuff. There's a lot of internal use software being written in the US. Um, the credit is basically for the wages and supplies, and also the contracts. If you hire somebody else to write the software for you, depending on how that contract is written, you could get credit for that. Uh, and you really need somebody who understands the R&D credit. When you're writing that contract, there's certain terms that you need to put in there, or have your attorney put in there, that will prove that the work is your work, not the company that's selling you their services to write the software. Um,
That one I'm gonna harp in on, because this one, that contract research is a very touchy subject specifically. And I find that more times than not, when I ask about their contractual or contract procedures, the common answer that I get is it's a template, man. Like we just have a standard issue contract. And sure enough, there are a lot of instances where we have a standard issue contract. So if I look at 3 or 4, I realize they're all exactly the same. And so I could expect language to be just that. But then there are also companies that you have the standard issue contract, then you have addendums, then you have all these other, and it turns into this massive goose chase to figure out like, hey, like for this phase, this project, this whatever, like, right?
They're huge.
Right. But, and I think now if you're looking at focusing on the contract research portion of your R&D tax credit study, obviously my first thing is you need to go look at the contracts. Let's see. It's one thing for you to have your verbal understanding of what happened. Like, hey, what did we agree upon? And there's another thing. This is where I find people get themselves in trouble, is my understanding what the agreement was and what the contract says don't always necessarily align. And after we look into it, we realize, hey, for you guys, if you guys have a better understanding of you, your customers, your clients, and all that jazz, right? So it would behoove you, or it may behoove you to take another look at this agreement and really look at it, to your point, because specific language in the contract matters if you want to claim the credit. Now, on the flip side, sometimes good business decisions aren't good tax decisions, right? Like, sometimes you just have to protect your business, or and someone else will protect theirs. And sometimes the language may conflict with your ability to claim the credit, and that might be okay. But I think this is where it's important for someone such as yourself who understands, hey, these are the criteria for you to claim contract research. And I think this is where someone from on that side of the credit, where someone who has reviewed and really had to break down, hey, does this qualify or not? I think this is really important. And this is why I wanted, one of the many reasons that I wanted to hear, because how often has it that someone tried to claim a credit and you realize there's nothing in this contract that allows you to claim this, right?
Right. It's really based on the benefits and burdens.
Mhm.
Who is getting the benefits of the software that's being written by the contractor, and who is responsible for paying for it? Sometimes these contracts say that if the software is not successful, then it will it the person buying it has to pay anyway. If it is successful, it's all kinds of little rules in there. And I don't think it really would change the company's legal position to modify the contracts to just have a couple of statements in there that specifically get you, as the writer of the contract, the signer of the contract, the tax credit that goes with that work being done. Another aside, by the way, I have looked at companies that do internal use software who don't do any outside, don't have any contract work being done. But the vast majority of companies do have contract work being done. Another thing is that contract work needs to be done in the U.S. It's under the same rules as the R&D tax credit itself. The work needs to be done here in the U.S. and every other rule, there needs to be a process of experimentation. It needs to be, the 4-part test. And I'm not sure if you guys are aware of what the 4-part test is, and I was going to cover that a little bit later. So let's continue.
Yeah. Well, most folks are in a situation where, whether they realize or not, they are creating internal use software. They don't, oftentimes I'm finding, they don't recognize that in itself qualifies for R&D tax credits potentially, right? Now, we broke down the initial expenditure classifications, of which actually qualifies for the credit portion. Now, if there are things that are allowed, there are also typically things that are disallowed, right? So just because you created or you have internal use software doesn't necessarily mean you get a credit, right?
True. Oh, well, I think the definition of what internal use software needs to be talked about a little bit, because some companies go out and buy, like, for example, an ERP system. They spend $1 million, $2 million on the software. They get it from SaaS, or they get it from some other, big software manufacturer. And then it's time to set it up. The way these ERP systems are set up, usually there's screens that are filled in, fields that are filled in, uh, that make the software specific for your business. Um, that filling in of those fields is not a qualified activity, as in writing software. The rules about writing software are that writing software in an editor or in what's called an IDE, which is an interactive development environment, that could be qualified. But filling in fields in a on a screen are not usually qualified. And the reason I'm saying this is because, well, a large company might spend $1 million buying the package, they're spending $20 million setting it up. It's much more than the software itself cost.
Mhm.
So how do you deal with that as an R&D credit professional? Is there's a thing called shrink back. And shrink back is not really talked about very much. We at the IRS used to talk about it all the time. If a piece doesn't qualify, if a business component doesn't qualify, you need to shrink back to the next biggest piece that qualifies, and then do the tax credit on that. If that doesn't qualify, you shrink back to the next biggest piece. You keep getting a smaller and smaller piece until you reach what is known as the substantially all requirement, which we're not really talking about today,
Mhm.
but that was something that came up in the recent Kyocera case, where Kyocera, um, the person who did Kyocera's study, and I don't want to mention their name, it was a big four accounting firm, did not um, have the information about what people were doing, what the employees were doing, to know which ones were doing the research, which ones were supporting the researchers, and which ones were supervising the researchers. They didn't have that information, so they couldn't do the substantially all calculation, and the judge lambasted them for doing that. That only came out recently. I
Mhm.
think it was in July
Yep.
that that case came out.
That
Sorry,
one
I got.
case has definitely caused ripples, right? Especially, well, for folks in the R&D tax credit community, and does add frustration and stress, but I think it's needed, right? Because one of the things, or it's one of these things that I commonly say is, it's not what happened, it's what you can prove. And so for me, unfortunately, and I mean this in a sense of, when you have relationships with these businesses and you understand, like, you've been to their site, you see how they operate, you've seen that they're not lying, right? It's not like they are legitimately doing all of this work. But the unfortunate thing here is that, especially when I see this more commonly in these smaller businesses, right? We're like, look, we don't have time or money to focus on things like bookkeeping, man. Like, we are trying to keep this business afloat. We're focusing all of our efforts on innovating and driving this industry, like, right? Whatever it is to keep the lights on, that's what we're doing. And for me, unfortunately, if there is no thread for us to pull on, for us to stitch together the evidence, right? And not a story, and like evidence first to say, hey, we have definitive proof that this thing has occurred and things have happened. You're putting yourself in harm's way, right? And so for you and me, I think, for us, we always kind of lean into, hey, where's the documentation? What documentation do you have? What substantiation can you provide in the event that the IRS comes knocking on your door, right? And I think this Kyocera case kind of pulled back the shawl of saying, look, for any of you who decided, you would just say, oh yeah, we did $10 million of R&D, and you don't have any receipts, so to speak, I think you're going to find yourself in a world of hurt soon, right?
Absolutely, absolutely, and it's getting much tougher. I remember a couple of years ago, I was out in Silicon Valley, and I was with one of the IRS managers, and she said to me, How could it be that X company is not doing any R&D?" And X company was like some huge company. I had not audited them. She was asking about how could this major company not be doing any R&D? And my answer to her was, I'm sure they're doing R&D. They just haven't documented it correctly. It's all about the documentation. Your IRS agent only cares about how what you've done meets the tax law.
Mhm.
And if you can't substantiate that you've done it correctly, they're going to disallow it. They have no other choice
Mhm.
because their manager's asking them, well, did he get the documentation? And the IRS agent says, well, they didn't have this. They didn't actually keep track of the business components. They don't actually have a system that keeps track of the time. And you're kind of screwed. And it's not because you didn't do the research.
Mhm.
A lot of these companies do research. It's a question of how you show the IRS that you did that research. And it's super important. I don't think it's emphasized enough.
Mhm.
Uh, and now with this whole new Part G thing on the 6765, that's where you need to specify when you're actually filling out the tax form what the business components were and what wages were being used are going to be used to calculate the tax credit. Now it's a big problem.
Mhm.
Um, the Before, what a lot of taxpayers would do, especially the largest taxpayers, they'd have the big four come in, and the big four would do an estimate of what they think maybe the tax credit should be, and then everybody goes home. Um, the IRS comes in later on, and all of a sudden, the big four accounting firm needs to get their butt in gear to put the thing together because
Mhm.
they didn't really do it. The numbers are invariably are very different than what they put down on the form. I've seen companies put down $10 on a 6765 just to keep it that they filed the
Mhm.
6765, not the amount, because they're going to amend it on audit. That's the plan.
Mhm.
Or amend it, put in a 1120X later on, and that's another way of amending it.
Yep. And it's not only in the big four. I mean, and I think we've discussed this, before this episode. We have. For me, has it lost us potential clients? Yes, right. But there is too many instances at this point for me to feel comfortable where, and obviously we're not going to name names, but we have received clients from, and they come from other providers, and either it was an estimate, and it's like the argument here is like, hey, we'll do a rudimentary due diligence period. Sometimes it's literally just a questionnaire, right? With like a brief explanation, no deep dives, no nothing. And then you fill it out, plug in, whatever, send us some sample documents, and then we'll just send you a number. And we'll only provide the necessary anything, if they do at all, if you get hit with an audit. And for me, at first, I was like, this is ludicrous. But for me, there's just to be fair, I'm still not gonna say it's right, but to be fair, the work involved with companies who have not instilled an existing process to properly document, substantiate, and now on the RD tax credit study, it still takes work, right? You still have to, hey, like, now we got to compile all this information. Is all the documentation actually up to snuff? Do we still have to stitch other pieces together? Do we have the language to explain this narrative in our study in a way that is appropriate, honest and appropriate, right? Let's not, for obvious reasons, let's just assume no one is trying to commit fraud here, right? Like,
Right. Sure.
so that all takes work, right? And from a person who, in most practices, we're finance people, we're tax people, we're accounting people, we're not engineers. We don't understand the significance of some of this stuff. Like, okay, so you put a new module in, cool. Like, what does that mean, right? You put a code for something, something, something. I'm like, okay, so you made it work better. What does that mean, right? So this is where I understand. Not that I'm saying that it's right. I understand why things happen, right? There is a lot of work potentially involved, and it's oftentimes, quite honestly, over our head. It's like, it's not something that we understand. So yes, we want to do right by our clients. We still want to provide them with stuff, but again, this is where I'm like, we're not doing that. Let's not do that. Let's understand. Like, from the minute you told me you come from an engineering background, my heart just soared. Like, for me, it was just okay. So again, just be in full transparency. I am not an engineer by any means. I'm a nerd with curiosities, but I still understand where my lane is. I understand that I have fascinations, but I have engineers that I need to go check in with and saying, hey, so this is a thing that I heard. Is it does it make sense? And secondly, like, can you kind of explain to me what the significance of that is from an engineering lens who understands how to speak to dum dums like me?
Well, that whole ability to speak both technologically and accounting wise, in one person is a valuable thing. That because that barrier between the two is not that easy to transverse.
Mhm.
Um, I think it behooves every company to document things before you get to the point where you're in an audit with an IRS agent or you're in appeals. It just doesn't make sense to not prepare in advance. You
Mhm.
prepare everything in advance. Preparation. What do they say? Success is 5% perspiration and 95%
Preparation.
preparation. So I totally believe in preparation. If anything, as an engineer, I'm rational and I'm logical. And my logic says you need to prepare in advance.
Mhm.
You're not going to be able to have contemporaneous documentation if you just start creating it when you get called in for the audit.
Mhm. Yep.
Contemporaneous documentation is documentation created while the R&D is being done, and you're required to have that.
Mhm.
It's to me, it's a no-brainer, as we say in the high-tech
Mhm.
world.
Yep. And this is so. This. So I guess I'll kind of zoom out a little bit, right? So one of the reasons why, like you mentioned, we actually one of our best clients tend to be banks and insurance companies globally, right? And one of the things here, obviously, is it's a bank. It's a bank. It's insurance. What R&D could they possibly have? Software, usually software, right?
Yep,
And
absolutely.
and if you think about it in a different fashion, not only do they have software to run their operations and make sure that their regulations change, so the compliance changes, so which means that that does affect the software they use internally, right? But also in this day and age, cybercrime is crazy. So as you are changing the cybersecurity and the defense mechanisms and all this other jazz, plus the math involved with all your risk ratios and all this jazz, there's high levels, like absurd levels of genius that needs to go into this regularly, right? And and because banks and insurance companies are typically insanely like obsessive about compliance, at least the ones that we've interacted with, they've been documentation is like every minute of their day is just logged. It's logged, right? What are you doing? When are you doing? How long did you work on it? When did you log out? Did you close it out? And it's like it's a dream, right? Obviously, there's still the purpose for a lot of the tracking is different, so that you still have to massage things to make sure that it right as is. It's kind of weird. Sometimes you have to make sure it fits the narrative, right? But still, documentation is there. But I'm sure you've seen close-ish or close to idyllic to like horrendous where like you have pocket lint and like handwritten paper saying I did R&D, right? What would be some like starting level things to start having good documentation, contemporaneous documentation practices? Do you have like a quick list by any chance?
I have, well, I know historically how it was done
Mhm.
when you didn't have documentation. When you didn't have documentation historically, a company, an accounting firm would hand out surveys to the employees, sometimes only to the SMEs. The SMEs are the department heads. They, officially called SMEs. The actual employees, the actual researchers, would get these surveys, and they were very general, and they would check off the boxes. Yeah, I wrote software. Yeah, I took lunch. Yeah, I reviewed other people's code. Oh, they would hand this thing in. That was usually done only when an audit was already underway, so it wasn't contemporaneous.
Mhm.
And even if it was contemporaneous, uh, we generally would not look very kindly on those results. Um, that's historically how it's been done. Now, with the 6765 Part G thing, and I want to talk about that for a second, that Part G was put in there because in the last, I'd say, 4 or 5 years, even maybe even longer than that, there were certain people in what's called the IPG at the IRS. That's the Issue Practice Group. Actually goes by a couple of different names, but it's generally this group of people that sit in an ivy tower somewhere, and they, oh, we need to do this. There was a very, very strict gentlemen in that group who demanded business components for years. And, we basically stayed as far away from this guy as possible. It was well known to stay away from these guys. Um, he eventually, and this was since I retired in the last year and a half, he eventually convinced management to that audits need to be done in a certain way, and business components needed to be looked at first, and thus the Part G 6765 went into place. Now, the good news is he retired, I understand. So maybe things are going to be getting a little bit better. I actually heard from somebody who retired a week or two ago who said he thought that things were getting a little bit better, that whole crazy idea of business component centric R&D tax credit studies is kind of on the wane. But we'll see. I don't know if that's going to actually happen or not.
Well,
I understand. I'm sorry.
I mean, there's something I want to delve in. Well, I want you to finish your point, but I do want to have an understanding for folks. Again, there are going to be folks who don't understand this, right? So, like, eventually, I do want to see, like, what is the significance of having that business component first? What are the pros and cons, like, right? But I want you to finish your point first.
Okay. The pros and cons of the business component. The business component is the thing that you're lease licensing or selling
Mhm.
or using internally. It's the actual thing. In software, it's the piece of software.
Mhm.
Um, the What you need to do to fill out that Form 6765 Part G is you need to say the people who worked, the employees' names who worked on that business component, and whether they were a researcher, whether they were a supporter of a researcher, and whether they were a supervisor of a researcher. Those are the three only types of people that are qualified. So you could take something like the employees in a software department, and you have some people who actually write the code and design the code. You have some people who are called the support people, and they might be doing things like they are going through the code and putting all the comments into Jira or into GitHub. They're sort of supporting the development, but they're not actually doing it themselves. And then you have the supervisor, and I mean a first level supervisor. This is your manager who you are working with, who's sitting over your shoulder watching you type on your keyboard to see what you're going to write for your code. So it's very close in there. Somebody who's a second or third level manager, a VP, a COO, whatever it is, a higher level manager is not qualified for the credit. So the idea is you need to know what the business components are at the very beginning of the tax year. I suggest at the beginning of the tax year, before you start anything, you finished last year, map out what the business components are, because whenever somebody does any work that you believe is qualified, they need to write down what business component they're doing it for. Very, very important.
Mhm. And now, why would that be a why is that okay? So why is the fact that we're putting that section G in, whether from the administrative, like the administration of it, or maybe for the taxpayer's perspective, like why is that not the best ideal solution?
Well, first, I need to go back to what large companies do. What large companies do is they do statistical sampling. Say you have 10 employees. It's no problem. You can ask each one what they do. What do you do when you have 10,000 employees? How about 30,000 employees? What are you going to do? So what these companies do, what these R&D developers do, is they do statistical sampling, which is allowed in the IRS code, and they will um, collect information from a certain percent of the entire population of employees, the 20,000, and project it to the entire project the results they have from this small group of 100 employees to the entire 20,000 employees. And that's generally how it's done. But that doesn't really support business components. business components is a separate thing. There's two ways of, you tell me if I'm telling you too much here. There's two ways of doing these audits, right? There's two ways of creating these R&D tax credit studies. One is called bottom up, and the other is called top down. Top down would be looking at business components. That would be, is this whole project qualified? Does the whole project meet the four-part test? That's one way of looking at it. The other way of looking at it is bottom up, looking at individual people, individual employees, looking at what they did, and then projecting that to the whole population. So the bottom up or top down, they don't necessarily mix very well. And what most taxpayers have been doing for the last 20 years is they've been doing top down. They've been looking they've been looking at bottom up. They've been looking at the individual people and then projecting it to the whole population. That's the problem that the IRS had with it. So this whole idea about business components and Part G is a requirement that you shall look at the projects first from the top, not the people's activities from the bottom. The R&D credit is an activity-based credit. It depends on what the engineers do.
That's a fair statement, right? It's like, in a way, I try to think about what the motivations for adding that in. And in my mind, it was a little bit of like, hey, like, I think the IRS is tired of people putting in like nonsense claims, right? And so for those who think they're just going to backfill later, like this is kind of like a big FU. um, but yeah, I mean, it makes sense, right? Because, at this point, I think I've seen every possible iteration of like approaches. And there have even been heated debates over which is the correct method to approach these studies. And uh, for now, I mean, maybe it's just my own ignorance, but like, I got to the point of teach their own, right? But for me, like, I don't know that and again, forgive me for my ignorance, right? If there really is a true right answer, but I don't know that I care so much about the approach you take as much as the meat and potatoes. Like, hey, like again, for me, it's like, hey, does the documentation exist? Is it there and present? Did you organize it in a way that actually I could read through, right? And thirdly, like, does like ultimately it's compliance, right? Did you do this in a way that's compliant, right? And
Right.
I don't care which way you do it. Honestly, I don't. For me, it's like the result. Is the result correct? Like, did you do it appropriately?
Right. And building on that, Alex, is the IRS agent doesn't care whether you did great research, whether you invented the atomic bomb, whether you what you've done. All they care is what you've done meets the tax law. They're just enforcing the tax law. If what you've done is poor engineering work, they couldn't care less
Mhm.
as long as it meets the tax law.
Right.
So it's a whole different way of looking at it.
Absolutely. So, for those who are looking to start getting into the R&D tax credit space, whether as a taxpayer, provider, advisor of some sort, right? CPAs, EAs, and things of that nature. Um, in terms of substantiation, in terms of documentation, what are some things that you recommend that people should start considering or start really looking to implement in their businesses or processes?
I would say the first thing you need to do is you need to think about this all during the tax year and not just at the end when you get an audit letter. Next thing is you need to think about business components and think about the whole thing from a business component point of view. Um, and there's more to it than this. There's a zillion little rules in the IRS code about the R&D tax credit that any one of them can trip you up. And the chances of you knowing when you're doing the work what you should write down, what you shouldn't write down, what you should say, what things you should do, what things you shouldn't do is really almost like a an art that needs to be considered all during the year,
Mhm.
not at the very end. It's too late at the end. You need contemporaneous substantiation. Time is gone.
Yep.
It's it's over.
And that's where we get ourselves into trouble. Because for instance, I mean, there's I mean, I think between you and me, I think we could probably rattle off so many instances where it's like that unfortunate. I wish you had called me way before it was time to file, because now I don't know what I can do for you, really,
Right.
right? And the other side of it, I think you just kind of touched on it in terms of, well, for me, there's what happened and the unfortunate labeling of things, right? So, for instance, for me, I still think calling it the R&D tax credit is kind of unfortunate labeling for me personally, because people think R&D, they still think biotech, they still think, right, all these crazy high bleeding edge technological things, where the R&D tax credit from the IRS standpoint generally is still just something new and improved to your business, right? Not the world. And I mean, again, still there's stipulations, right? Now, one of the common things now that I see, even in the software space, right, is you have the labeling of sales people or marketing departments. And for me, usually, as soon as I say it, most CPAs, even those who know R&D tax credit, they cringe. What did you say now? You're including sales expenses, marketing? Are you serious? Are you stupid? Are you insane? And then we realized no, because we thought the same thing until we realized, hey, the part of the sales team are actually engineers who are going on site, and so they're not just selling things; they are sales engineers. Unfortunately, the company just never thought to like define that from a documentation standpoint. So now we have to sit there and say, okay, so explain to me exactly how do you do your job, right? Are you just sitting there making calls and trying to like sign people, or are you actually going there technically understanding the customer's exact needs? And because you are also an engineer, you understand the limitations and the capabilities of your products, and now you could take that exact thing and build it. Is that what you're doing, or are you, or again, if you're just selling things, if you're not doing anything that is defined by the IRS, do not touch it. Do not touch it. Please leave it alone. Put it down. Put it away. That's just a regular business expense. Call it a day, right? But
Right,
I think this
right.
is
It's
where,
based on the activity of the person, not the title. So if
correct.
somebody's an engineer and they're a sales engineer, and I had been a sales engineer sometime earlier in my career, um, you, that is not a qualified activity. A qualified activity um, is a process of experimentation, is testing something. In the software world, we call it writing a stub. Now, when you're working on a big piece of software, you're not necessarily testing out things within this big piece of software. You're writing what's called a stub. You have this idea, well, I'm going to do a linked list for the names of the employees, whatever you decide to do, but you write a little piece of software, little test stub, and you test it in there to see if it's going to work. If you see it's going to work, then you will put it into the big system.
Mm-hmm.
So the writing of stubs is a very important thing.
Mm-hmm.
That pretty much proves a, a process of experimentation.
Mm-hmm.
There's, as I mentioned before, there were some very hard-headed IPG people in the R&D section of the IRS, and they were pretty negative on what they call routine software.
Hmm.
Now, what is routine software? Routine software, I don't even know what routine software is. As a software developer for 17 years, I can't tell you a single routine thing I ever did.
Right.
If I'm writing free-form software into an IDE, an interactive development environment, everything is experimental. I couldn't code 2 lines without a debugger.
Mm-hmm.
That's just me. I would say if you're cutting and pasting code from one place and pasting it in somewhere else, that might be routine. But again, the hard-headed R&D IPG people have retired. So I'm hoping it's going to get a little more like reality.
Mm-hmm. And that's,
They're very negative on debugging. I mean, they had this idea that the word debugging is like when you debug a assembly line.
mm-hmm.
You're moving this machine a little bit 2 inches closer this way, or you're moving this conveyor belt 5 inches that way. That in their mind is debugging. And debugging in software is something completely different. It is writing something, checking out what the results are, running a little piece of it in a debugger,
Mm-hmm.
and then modifying it and going back and changing it,
Hmm.
which is really a process of experimentation.
Right.
So there was a misunderstanding there between people, non-software engineers and software engineers.
That- that's a common thread, though. I think even in corporate, in the corporate world scenarios, there's always this catch up that needs to get played, and I feel like the IRS is another guilty party to it. Of our our understanding of things are sometimes years, if not decades, behind what the reality of the work is, right? So, because for me, I I want to be generous in that. Well, not even generous. I just want to be what do I call it. I want to give you the benefit of the doubt, right? Of because like for me, growing up, like oh, just debug the software. It was literally just a button that you clicked for a software that was already done, right? So when he's like, "What do you mean debugging?" He's like, "You click this debug thing and it fixes things. It's like a troubleshoot automatic thing. So it's a done product, right? It's just hey, something didn't work." But then when I talk to someone who develops something, like, yeah, that's not how that works, man. Like, I don't, right? So now we're in a situation where even with our firm, because we do have engineers on staff, there's like these great tirades of like, what do you mean this doesn't count? What do you mean this doesn't qualify? Like, do you even know what you're talking about? Like, I don't, but I'm just trying to read what the IRS has told us in black and white, right? And this is where I think, to your point of sometimes, and just maybe a greater scope too, sometimes the work involved doesn't necessarily align with what the labels are for what they're saying things are match. And still, okay, so this might be a little abstract, so I apologize, but there is space there where sometimes there are gray areas, right? And from a consulting perspective, I'm not gonna tell you what to do. All I can do is provide you what the rule sets say, how it has been like digested by the industry, by folks, and I look for precedences that may make or break an argument. But if you disagree, at the very least, I could try to find things where out there in the ether, whether it's legal guidance and precedences and things of that nature, where you can make an argument. But understand that if it's not in black and white in the IRS, there's always a chance, even then, like there's a chance that the IRS can take a look at that and say, no, I disagree. And to your point, I think here is like sometimes it's just like, hey, what is your argument? You could, and that's where still at the end of the day, where sometimes I find it's weird too, because I think, hey, where's your argument? Do you have a stance for it? But then sometimes we get to that point and we realize, hey, wait, rewind. By the way, do you have documentation to prove that you even had this thing up and running? Yeah, I do. Bob's in the back office. He's been on the. Do you have documentation? Do you have documentation? Like, do you have meeting notes? Do you have like when you first plan these things? Did you have the initial phases somewhere? Do you have the files somewhere, like log date, time dates, like date and stamped? Where right? Is this does this make sense, or am I being a little wackadoo?
No, no, you're right on the money. And sometimes this data is needed years and years later.
Mm-hmm.
As I mentioned at the very beginning, the R&D credit is a non-refundable credit, and if you can't use the credit because you're not in a profitable position for a tax year, you can carry forward that credit for 20 years and use it the next year, use it the next year. So if you haven't documented, if you haven't built a dossier of the information about a specific year's R&D work that was done, 15 years from now, you get audited on something else. The IRS is going to say, well, you want to use this carry forward.
Mm-hmm.
Show me the documentation from the year that created the carry forward. And you're going to say, oh, I don't have it. Yeah. So what I'm thinking is people should be, at the end of every tax year, should be building a document that includes all that information. You know, the way with AI, with large models, large language models, that it's like a ball of data that's pre-built.
Mm-hmm.
It goes out and it collects all this data from the internet or from wherever it gets it, and it pre-builds it into this ball of data. And then when you on your PC query one of these AI systems, it's going to that ball of data. It's not going around the world looking for the data. So I think that analogy of pre-digested data is a very good one.
Mm-hmm.
And I would suggest, you know, putting in a system that will keep track of your data on a yearly basis. So you have this package. If the IRS comes looking for you 15 years later because you want to use your carry forwards, then you got it. You just go back to that year. You got all your data in the ball already.
Yep. And that's a really good point. Which, I mean, side note, I was a little surprised when we brought up AI implementation as potentially qualifying, and people were like, what do you mean? It's like, and this is kind of an aside because they obviously everyone and their mothers are trying to get AI something in their company, and it's become apparent that most commercially available AIs have woefully bad security measures in terms of like, hey, like, for instance, I believe, if correct me if I'm wrong, internet will definitely crucify me if it's factually incorrect, but I think it came out that ChatGPT, for instance, they outright said we're not there's no security here. Like whatever you put in there is gonna be public, right? So for lots of reasons, a lot of companies had took it upon themselves to take an AI model, close the doors, and just say we're going to train it on our information, so that
Right.
now,
Which is wise. Yeah.
which is smart,
for security
right?
reasons. Yep.
Now, in those instances, you may be well, I'm going to say more than likely. Like, there's no absolutes here, but more than likely there are some qualifying activities there. Right? Yes, you took an AI. Maybe it's commercially available, whatever, but you took the technology and you shuttered the doors so that you have an internally usable software. It is still a software, right? And now, selfish me for some of the things, like some of our clients, I'm like, hey, look, you're already building out these AI things for your company, and you're saying that we're not going to pay for time tracking software. We're not going to pay for additional documentation logging systems. You have an AI, right? You're already in this realm. Would it be, and look, I don't know, right? But I think it's worth it for you and the decision makers in your company to have a discussion of like, hey, we're already implementing this AI thing. How much of a heavy lift is it to build in some kind of time tracking system, some kind of maybe tagging system where like documentation for certain R&D projects automatically just log and get put in a bucket, right? Am I sometimes I feel like I'm crazy, but it would be like the AI implementation to create the tools to log your R&D activities is kind of like a weird Ouroboros situation.
Right. Right. I mean, a big part of the requirements would be you need to gather the information. The knowledge is in the brains of the engineers
Mm-hmm.
and the accountants and the managers there. But how do your AI system is not going to be able to get into their brains unless they put it on a piece of paper or put it in a system, in a spreadsheet or somewhere. AI is not going to be able to access it.
Mm-hmm.
So that we have this interface between um, humanity and the AI
Mm-hmm.
system. And that interface is hard to get over unless somebody specifically said, thou shalt write down all your ideas. Everything you have in your mind needs to be typed into the computer so our AI system can find it. Um, that 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 collection of the information is a very difficult piece
Mm-hmm.
right now.
And again, there's standards, and there's a gold standard, which arguably I don't know of any one company that has achieved like absolute perfect documentation substantiation practices. However, that doesn't mean that you should not try. And this is where I always kind of my spiel has always been, look, I like to meet folks where they are, right? Because there's sometimes there's like if you don't have it, I'm gonna not do it, and or there's like some folks who kind of almost beat themselves up over it. It's like, oh, why didn't I think of it? I'm like, easy. Okay, look, there are certain things you're not there yet, but at the very least, let's start with where you are. And all we're going to say is, as things progress, we will work and find ways to shore up your deficits to have better practices. And if I'm not mistaken, you did mention that you were interested in helping companies have better documentation of substantiation processes and things of that nature. Am I off mark here?
No, no, I'm interested in knowledge management. Yep, absolutely.
And this is for me. I think that it's going to be an increasing need in the market because thankfully now that the required amortization of 174 is gone, I think that's the other side of it, right? Look, whenever there's an incentive and it's very robust, there are always going to be either people who are reckless or fraudulent. It is what it is, right? And sooner or later, IRS does catch up because when you mess with the government's money, bad things happen,
Right.
right? So loopholes get closed, things right, and so I'm telling folks this because if you think that you're going to continually be able to fly by taking not even close to up to par work and hope that you're going to get ridiculous credits for it, it's not going to work that way. And I think the other side of it is if we're doing the R&D tax credit, yes, for our existing clients, we do try to help along the way. But I think folks like you are absolutely needed because there are plenty of other folks that said, hey, like we claimed the credit or we wanted to claim the credit. I don't have the foggiest idea where to start.
Right. It's the client's, it's the taxpayer's responsibility to keep the data, not the R&D consultant. The R&D consultant takes the data that the taxpayer has accumulated over the year and puts it into a format to put it on the 6765 and to defend it against the IRS in an audit. But it's really the taxpayer, it's the company itself's responsibility to keep that data. And I was thinking about this a moment ago. The chances of you keeping the correct data without specifically trying to collect the correct data is one in a million.
Mm-hmm.
There's not a chance in the world
Mm-hmm.
that you're going to have everything in the IRS code covered
Mm-hmm.
randomly. You need to know, I must have this, I need this. Hey,
Mm-hmm.
Mr. Manager, I need you to write an email to me saying whatever you are doing, you need some it in writing somehow.
Right.
It's back to how do you get the information into the system?
Yep. And I don't want to keep you for too long, but one of the things here is as I speak to more CFOs, you know, business owners and things of that nature, it's kind of like, but why would I? Like, so you're telling me in order for me to claim this incentive, I have to spend more money, I have to shell out more money. I mean, have to? No, but I would, just like you don't have to hire someone to mow your lawn, but oftentimes if you're busy enough, it makes sense to, no, right? Right, and for me, the other side of this then becomes it may not behoove you to, for instance, like pay for consultants to help you with the R&D tax credit. It may not behoove you to hire someone like Mr. Bernstein to help you make sure that the documentation is there. However, consider if, just for simple math, if the conversion of the amount of money that you're putting into R&D, like and just for simplicity here, IRS qualifying R&D, right, expenditures, if you just do simple math and say 10% of that would have been a credit, right? You could do the math in your head because I don't know your operations, right? Now, if you take that 10% number, is that a meaningful number to you? Because if it's not, then yeah, forget it. Like let it go, right? Or take your chances if you choose to pursue it with your tax person and call it a day. But there are lots of companies who are like, look, I have like 300 engineers and like 80% of them are doing R&D, like you said, because that's all we do. That's how we make our money. Okay, so what are we talking about here? Right? Like if an engineer on average is costing at least $100,000 in salary, at least $100,000, and you have an army of them, like if you and I have no idea what you're charging, right? But like let's call it nonsense numbers. Let's say you're charging $500,000, right? And you're spending tens or hundreds of millions of dollars. Wouldn't it save you? Would it be worth it, right? Would it be worth it to have that insurance in your back pocket saying, hey, look, at least we know that someone who knows their stuff is walking us through the proper compliant ways to have a strong defense in the event that things go wrong.
Right. I agree with you. I agree with you, Alex. I mean, otherwise you're putting you yourself, your company, and your job at risk as a tax manager. You had this R&D. tax credit, you put it in there and it failed terribly
Mhm.
because you didn't keep the documentation, whatever, it's not going to look good for the rest of your career at that company.
Yeah.
So you're putting yourself at
Mhm.
risk.
Mhm. It's funny, like when I think about the how a lot of our minds work, right? Obviously, oftentimes it's like reward and risk, like right. And I think maybe it's my CPA brain that always like look, you're gonna give me, it's gonna get me back another $1 million. Great, right? And we always assume that's the carrot that we need. But sometimes it's like, look, as a someone who makes decisions on behalf of potentially hundreds, if not thousands, of employees, I want to rest assured that I'm not putting these people's livelihoods in danger. Like, forget the credit. Like, I want, like, what am I doing the things the right way so that our company and its employees will continue to do well. And sometimes it's that. And again, this is where, like, I know I'm getting a little out there, right? A little woo woo about these things, but like for me, this is why, hopefully, why we want to do these things. I want to be able to say, hey, I did help companies, yes, but the companies have people with jobs. These jobs are insured because we are helping them either save money the right way and keeping them safe from just the world that we live in, right? Sometimes it's just a matter of,
Right.
you are doing the right things, maybe tune it up, just like your car. You buy a good car with safety mechanisms in place so that you could get from point A to point B, have some fun while you're at it, right? Relatively safely, but you could take it to the garage for a tune up. You fix what's broken, and sometimes maybe you need to modify things, right? But here, I think this is where your work and your tutelage for me, because you have helped me piece things together where I for sure was either inklings or whatever. So if I'm wrong, you correct me. And for things that like where I might be on the right track, you kind of fill me in on these things. And so with your years of experience, I do really truly find myself happy to have made your acquaintance. Like I'm so glad that you didn't just blow didn't just blow me off. It's like some random guys calling me on LinkedIn. Um, but is there? I feel like I'm missing a lot of things right now. What am I missing?
It takes years and years and years of seeing many, many R&D tax credits to have a full 360-degree view of the R&D tax credit. It's just not a simple thing. There's so many moving pieces in the IRS code. I think you're on the right track. I think starting by documenting, have companies documenting completely. It's almost sorry, it's almost like a substantiation game.
Mm-hmm.
It's more than it is writing the R&D tax credit. It's substantiating it in a way that it's defensible.
Mm-hmm.
That's really what the game is.
Absolutely. Yeah. Just to be clear, it's not for us to get combative with folks, but for those who are either you get to choose one or the other or both. It's up to you. Whether let's call it a smaller tax shop, and they are saying, no, we just handle our own R&D claims, tax credit claims for our clients, or hey, we just like a company where maybe a tax director says we handle the R&D tax credit claim ourselves. Like, do you have any words of advice for them?
Um, I've seen companies, large companies, do that. Um, Usually does not work out well. Uh, there's usually a problem. In the past, the IRS was kind of lenient. If somebody was doing R&D, and I'm not talking about people doing fake
Mm-hmm.
R&D. We didn't. I didn't come across many people. I don't think any people in my 17 years that were fraudulent,
Mm-hmm.
as you were talking about. I just don't see it
Mm-hmm.
at my level, at least. Maybe that gets blocked out way before, or that's on the very, very small end. On my, in my view, uh, most of these people were doing qualified research. It really came down to what is the amount of qualified research? Are you doing this little tiny bit or are you doing this big piece? And sometimes the big piece needed to be shrunk down to a piece that could actually be proven. And that's it's back to that shrink
Mm-hmm.
back thing we were talking about. But I've enjoyed talking to you, Alex. It's been a pleasure.
Well, I'm more than likely going to be pestering you for more because I know I tried my best to keep it within the IUS because that is for sure a significant part of my curiosities these days. But with someone with so much depth of understanding, right? With like the level of reps that you had in this specific niche, I can't help myself but keep going on these things. So I do want to find some more time in the future to kind of pick your brain for this, that, and everything else under the sun that is R&D tax credit.
That'd be great.
But in the meantime, for those who would like to reach out to you, or where can they find you?
I'm pretty active on LinkedIn. Uh, Rich B 201 is my moniker, and I you could send me an email at richb201@gmail.com. So 201, I live in New Jersey, 201 area code, Rich B, which is Richard Bernstein, no, Rich B 201 New Jersey gmail.com at gmail.com.
Perfect.
That's the easiest way of getting a hold of me. Um, I am interested in helping people document their substantiation on a yearly basis. I can, of course, defend your company in front of the IRS if need be, but there's plenty of other people who can defend in front of the IRS. The specialty I'm bringing is creating the substantiation in a format that the IRS agent will see it and say, "Oh yeah, you got everything. No change. Bye."
That is, oof. I can't, I cannot tell you how much that is needed. But for now, all the information will be in the description somewhere. But Rich, thank you so much for your time. Thank you for your patience with me because I know that I tend to the curiosity demons always get me. But I do thank you for your
Thanks.
time.
Thanks for having me, Alex.
Absolutely.
I enjoyed it.
Well, if any of you guys have any follow up questions, concerns, anything like that, you want either reach out to Mr. Bernstein himself, reach out to me, and I'll go pester his brain. I'll be grateful for it. But till then, I'll see you guys on the next one. Peace.
Bye.